The US stock market has today, on 8th of April 2025, and experienced a notable rebound, recovering sharply after a significant dip triggered by trade uncertainties and tariffs. Hey, I am Caroline, AI assistant of Dr. V.V.L.N.Sastry, financial economist, Fulbright scholar, jurist, and international arbitrator. I am narrating the story authored by him. Let's get into that. With President Trump's administration imposing heavy tariffs on major global trading partners, the global markets had been reeling under the pressure of an impending trade war. However, recent developments in trade negotiations between the US and several countries, including China and South Korea, have sparked optimism among investors, leading to a remarkable recovery in US indices such as the Dow Jones Industrial Average, DJIA, S&P 500, and NASDAQ. The context: trade tensions and the global economic impact. The global stock markets, including US indices, had been experiencing a downward spiral for several weeks due to escalating trade tensions. President Trump's tariff policies, particularly against China, sparked fears of a global economic slowdown, affecting investor sentiment worldwide. Stock markets in the US, Europe, and other emerging economies saw significant drops in their value. The Dow Jones, for example, saw a sharp decline of more than 4,000 points in a matter of days. The tariffs imposed on goods and services between the US and China threatened to disrupt global supply chains and trade flows. In particular, industries reliant on cheap Chinese imports and those that depended on exports to China faced the brunt of these tariffs. The financial markets, sensitive to such changes, quickly reacted, sending stock prices plunging. The turning point? Trade negotiations and investor optimism. Fast forward to April 8, 2025, and the story is different. US stock markets have rebounded, and optimism is back in the air. What caused this sudden turnaround? The answer lies in the progress made in trade negotiations. President Trump has been working hard behind the scenes to engage with global partners, with a particular focus on China and South Korea. The hope for a trade agreement that could alleviate the strain caused by tariffs has played a crucial role in lifting market sentiment. Investors, who had previously been cautious and reactive to bad news, have now started to view the ongoing negotiations as a sign of a potential resolution. The rhetoric surrounding these discussions has moved from adversarial to collaborative, which in turn has restored confidence in global trade. The numbers: a surge in stock indices. The impact of this optimism is evident in the numbers. On April 8, 2025, the Dow Jones Industrial Average surged by more than 1,200 points, or over 3%, following a series of positive trade-related developments. Similarly, the S&P 500 increased by 3.7%, with a number of technology stocks, including Nvidia and Apple, leading the charge. The NASDAQ also saw a robust rebound, rising by 4.2%. Investors have started to turn their attention towards sectors that are likely to benefit from trade negotiations. Companies in the tech and healthcare sectors, which had been severely impacted by the tariff war, saw some of the most substantial gains. For instance, Nvidia, a leader in the semiconductor industry, rose significantly, as did Apple, which has been restructuring its supply chain in response to the trade dispute. The underlying factors: economic resilience and corporate earnings. The market rally is not just about trade negotiations, though. US economic fundamentals remain strong. Unemployment rates are at record lows, and consumer spending continues to rise, reflecting an overall healthy economy. Additionally, corporate earnings reports for Q1 2025 have largely exceeded expectations, with many companies posting better than anticipated results. The financial sector also showed resilience, Health insurers, for example, saw a significant jump in their stock prices due to the announcement of a 5% increase in Medicare Advantage payments for 2026. This news was welcomed by investors, as it promised higher profits for health insurance companies. A global outlook, the ripple effect. While the immediate impact has been felt most keenly in the US, the recovery in the US stock market is also sending positive signals to global markets. Stock indices in Europe and Asia showed early signs of recovery, with major bourses in Germany, Japan, and India following suit. The hope is that a resolution to the trade war will provide a much-needed boost to the global economy, particularly for emerging markets that are more sensitive to global trade flows. The road ahead. Will the rebound last? While the recovery in US stock markets is undoubtedly positive, investors remain cautious. The situation is still fluid, and the outcome of trade negotiations remains uncertain. There is always a risk that talks could break down or that new tariffs could be imposed, which would send markets tumbling once again. Moreover, the long-term sustainability of the US stock market's rebound will depend on several factors, including the broader global economic environment, domestic policy decisions, and corporate earnings in the coming quarters. The ongoing strength of the US economy, coupled with the outcome of the trade negotiations, will determine whether the current rally is the start of a more sustained period of growth or simply a temporary bounce. Conclusion: a fragile recovery. The US stock market's recovery today is a testament to the resilience of both the economy and investor sentiment. The optimism surrounding trade negotiations between the US and its key trading partners has provided a much-needed boost. However, investors should remain vigilant, as the path to a stable and lasting recovery is still fraught with uncertainties. In the short term, the market is likely to remain volatile, especially as news surrounding trade talks continues to evolve. For now, the positive momentum is driven by hope and the belief that diplomacy can ease the economic strain caused by tariffs. But the long-term stability of the markets will depend on the successful conclusion of these negotiations and the continued strength of the underlying US economy. As always, investors must keep a close eye on both domestic and international developments, as the balance between trade, politics, and market sentiment will ultimately dictate the direction of the US stock market in the months to come. I take this opportunity to thank Dr. V.V.L.N.Sastry for his excellent inputs. I also thank you for your viewing. If you like our content, subscribe, like, and share for more great videos.